Right, hello everybody. Steve Crippers here, developer of the MTPredictor software program. It's now top of the hour, so if you could all let me know whether you can hear me okay and whether you can see the chart stroke risk disclaimer okay as well. So if you just type into your questions and answer box, there's a Q&A at the bottom of your screen, just open that up and just type into that, then I'll be able to see that everything's okay. Right, looks like we're all okay, so that's absolutely fine. Right, so let's have a look at the risk disclaimer and just remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing, and this is important to understand, but more importantly accept that all professional traders, in fact all traders, amateurs and professionals, will have losing trades. It doesn't matter what trading approach you do, there always will be losses, and that's important to understand and more importantly accept. Right, so firstly, welcome to 2020, first webinar this year. It's a start of a new year, so hopefully we're going to have a great year. Hopefully you all had a good Christmas off. Happy New Year to everybody as well. So what should we be doing today in the webinar? Well, I'll start off by looking at our standalone version here. I want to have a look at our VS setup, our volume spike setup. I'll use an example on the USE minis that's unfolding at the moment. You can see on the chart there. Also have a look at the Forex charts and perhaps do a couple more tips and tricks on NinjaTrader 8. We'll have a look at that a bit later in the webinar today. So there's lots of different stuff for different ones of you. So, you know, even if we're not talking about your particular market, stay tuned because we probably will fairly soon. Right. Actually, should we start with this one? Actually, no, I won't. Actually, I'll come back to this one in a minute because I want to just go to a Forex example and just show you an overview of how we do MTPredictor and just give you an overview of what we do. Right, on our MTPredictor charts, you can see we have automatic trade setups. So is MTPredictor a black box where you just blindly follow the setups and that's it? No, it isn't. If you guys have been with us for a while will know that. Basically, the reason it's not a black box system is because in my last 33 years now, started in 1987, so it's 33 years looking at these markets. Blimey, that's quite a lifetime of following the markets, isn't it? But what I've discovered over these years is basically black box systems don't tend to work, and they don't tend to work because basic markets go in cycles. What do I mean by that? I mean that part of the time markets are basically random. In other words, you can't make any discernible kind of analysis, and that's where you actually get in a mess. And that's why black box systems that try to trade all the time get in a mess, because you basically have to wait until the picture's clear. So of course the obvious answer is, how do we know when the picture's clear? Well, for this we use our higher time frame analysis. So this is a chart of the euro, US dollar. It's on a 4-hourly chart. I'll just use our training mode here and I'll just jump back to a little bit earlier. So this is the same kind of analysis we do for any markets and any time frame combinations. What we're firstly doing is we're looking for previous major swing pivot highs and lows. As you can see here, there's fairly obvious a major swing pivot high there. So we right mouse click, we place a decision point on. Can you see how that gave us an area of resistance? But more importantly, that resistance was on the chart in advance. It was there before the market even got there. So what we're looking to do now is we then see what the market does as it approaches this level. Now, it's not a target to say it's going to get there. What we're doing is saying if it gets there, then we want to see what the market does at that level. In other words, is it going to react to that level? In other words, is the market going to make a reversal at our anticipated support or resistance level? If it does, as it did in this case, we therefore say that the picture is becoming clear because the market is doing what we anticipated. In other words, the picture is becoming clear. When the picture is clear on our higher time frame, we then look for trades on the shorter time frame. Now, you tend to look for trades with timeframes between 3 and 5 timeframes apart from each other. So if you're looking for trades on like an hourly chart, which we're looking at for here, you then have your support and resistance on your, say, 240 minute, which is a logical sort of time frame between 3 and 5 time frames higher. We'll be looking at the USE minis in a minute, where you're looking at the 3-minute chart. The higher time frame would be in the 15. If you're, say, trading daily stocks, you'll be looking for the weekly as your higher time frame. But you see, what we've got now is that suddenly here's our higher time frame resistance. The market made the reversal at that level. It then started to back off. In other words, the picture started to become clear. So therefore, we deem that in this case, the large degree trend is down. It's down off this resistance. As the market started to decline down, our MTP trend went red to then help confirm that as well. So that's what we're looking for, not just our MTP trend color. That's a good guidance, but we're looking for that in conjunction with the market making a reversal at our higher time frame support and resistance. So here the large degree trend is deemed to be down as the market is going down nicely. Therefore, we'll be looking for sell signals. So we would ignore this TS4 buy setup because obviously it's against our large degree downtrend. It's also against our MTP red. Therefore, we'll be looking for sell setups. So lo and behold, when we had this TS4 W3 or wave 3 trade setup come in here, in fact, if I use our training mode and I jump back to what it looked like at the time, there it was at the time, this would be a good one to take because the picture's clear. So we now right mouse click on our red sell bar, do our analysis. Remember, we use correct position sizing to keep our initial risk small under control. So when the losses come through, the loss will only be what we call one risk unit. When the profits come through, and this is why we like our W3 trade setup, and I'll perhaps have a look at this. It's another webinar. This is looking to trade the wave 3, which is normally the strongest and longest in a completed 5-wave sequence. So here, the start of the sequence would be where the market becomes clear. 1, wave 2, which subdivides from ABC. We're then looking for a wave 3 swing. That's why our target would be down here at the typical wave 3 WPT, or this will be the potential target for a wave 3 swing. As you can see, these are great trades because the wave 3s are normally the strongest and longest. Therefore, the profit, if it gets here, will be potential 10 times initial risk. At the moment, the market is declining down reasonably nicely. It's just ticking away. And obviously, we haven't got to this target yet, but this trade's actually in the process of unfolding. But that's what we're looking for. We're looking for the picture to become clear on the higher time frame chart. We're then looking for trades that are in the direction of the large degree trend, which has become a clear picture. If the market's not clear, in other words, you don't get a good reversal, or the market, you don't know what's quite going on, well, then you deem the picture's unclear and you stand aside. And that's the basis of why we say the markets are in cycles, because half the time you won't know what a market's doing, therefore you stand aside. Half the time you'll probably get a good reversal, but there won't be any good trade setups in your direction. For example, if I go to yesterday on ES, this was amazing. This was, I thought. Let's go to the 15-minute chart. This is a day session only chart. Just take these off. This was my analysis from yesterday. This was a day session only chart. So if I go back before yesterday even opened, there it is. Here's our last pivot low. So we right mouse click, do decision point. So on the 15-minute chart, this was an area of potential resistance, but it was on the chart before yesterday even opened. If I turn the trading mode off, let's see what it did. Well, it went down. That nailed the very low of the day. As the market started to rally up, where would the next resistance area be? Well, here's the last swing into that low. So you'd have right mouse click off this pivot here and had that as your next resistance area. Remember, that would have been on the chart before the market got there. If you now go down to the 3-minute chart, which is the one you're probably looking to trade, look what that did yesterday. Now, I find this absolutely amazing that there the ES basically came in right at our 15-minute DP low. It then rallied for the rest of the day. Where did it basically stop its rally? Well, it stopped it right at its 15-minute resistance. So, of course, what was the large degree trend yesterday? Pretty obviously up. That was helped confirmed by our MTP trend turning blue. So here yesterday, we actually caught the low and the high of the day perfectly. We caught the trend absolutely perfectly, but there were no MTPredictor setups. That happens sometimes, and boy, it is really frustrating. You can see the only setup on the ES yesterday was here with our history triangle, and that was a potential sell setup. So obviously you don't want to take that because it's against a large degree trend. So this is again what I want to try and show is that sometimes even when the picture is clear, you can get an absolute perfect picture on the higher time frame, but you don't get any trade setups. And that's, you know, one of the ugly parts of trading. This is again why I like to teach like this, is because I want to show you that sometimes this does happen. There was a TS3 buy setup on the NQ a bit later in the day. You can see it in there with our 15-minute support and our 15-minute resistance on the 3-minute chart. So there was a buy setup a bit later on the NQ, but I just wanted to show that sometimes you just don't get any clear pictures at all. But do you understand that the basis of what we're trying to do is we're trying to set your stall out with the higher time frame DP support and resistance zones, see whether the market is then making a reversal at those levels. In other words, is the market doing what you anticipate? If it is, then you deem the picture's clear. When the picture's clear, you then look for trade setups that are in your new trend direction. Sometimes like this, they don't unfold. Sometimes like the euro, as we've got here, they do unfold, and that then allows you to take trade setups in that direction. That is basically what MTPredictor is about. Are there any questions on that so far before I go and have a bit more detailed look at our VS setup or volume spike setup? Is everyone happy with the broad idea of what we're looking to do? In other words, wait till the picture's clear, then we look for trade setups that are in that direction. But also understanding that sometimes you can get really frustrating days like this that work perfectly, but you don't get any trade setups. Sylvian says, is it too early to go to break even on this longer term trade? Probably not. It probably is, you know, how many hour profit are you? 2.5 hour profit. The best place would be, Sylvian, the minor support zone, which would be the DP off the minor wave B. So off this wave B, you then do the decision point. That would give you the minor support. So if you get down to this level, where the profit would be at about 3R, then that would be a good time to then perhaps bring your stock to break even. Mazir has asked a good question. So do I care about fundamentals? The only thing I care about on fundamentals is whether something's happening. For example, if you have an announcement by the Fed, then you know the market's going to move, and therefore you want to be careful about taking trade setups before any kind of announcement that's going to give you a big move, because you could then have an adverse risk against you. Things like that, the attack in Iran, I mean, you know, can you actually predict that? Or can you see what's going on? Well, you know, you don't know it's going to happen. But if we go back to our 15-minute chart, clear everything off. If we go back to before President Trump ordered the strike, I'll go back to here sometimes. Let's look where our resistance area would be. Here's our last major high. So right mouse click, do decision point. That would be an area of potential resistance. By the way, for you guys who do a bit of Elliott wave analysis, perhaps I'll have a look at this in a future webinar, is that as you come down to the bottom here, that's a 5-wave sequence. Once the market goes beyond the DP from the prior wave 4, which was there, the next level of resistance is the DP off the start of the sequence, which is here. But look where the market went to. Look at that. Look, the market went right up to that level. There it is. There's the level before making a reversal. So, Mazir, to answer your question is, do you take account of fundamentals? No, but very often fundamentals take account of what we're doing here. I mean, why on earth did the market that looked like it was quite strong going up into that high reverse so sharply? Well, it reversed sharply because obviously President Trump ordered that strike. But for us, as using MTPredictor, it just reversed off our DP resistance area. So does that make sense then, Mazir? We don't track fundamentals, don't react to them, but we're aware of them if they're going to make big moves. But very often when a fundamental shift comes in like this, very often it will make a reversal at our DP levels that are on our chart anyway. So it's very nice to have that on the chart and be ready for that reversal there anyway, wasn't that? That was quite nice. Right, I want to have a look at our VS setup or volume spike setup. This is actually on the NQ, and this is on the 24-hour chart. What I looked like earlier, this one here is on the day session only chart. So I like the regular trading hours. I like this for trading the E-minis because it only plots data when the market's basically open. The US stock market's open, in other words, when the highest volume is. But we do have quite a lot of international traders. So in this one, I want to look at the 24-hour chart. So this is a 24-hour chart of the US E-minis and here the NQ. I want to look at this VS setup and go through what the VS setup is. Let's go back in time here. Right. What is a VS setup? Well, a VS setup is where the market makes a sharp high volume move through a previous pivot. You can see fairly obvious on this chart. There's a pivot high. So I'll just put the pivot high line on that. And you see, obviously, that's a major pivot high. Every trader in the world will be looking at that. Most amateurs will be looking at that. So what do you think if we go forward and then amateur traders suddenly see this? They see the market spike through a previous high on a big wide range bar on increased volume. Most amateur traders would look at this and say, that's a breakout. In other words, a break to new highs on high volume. The market is then going to go higher. That's what most amateur traders would think. However, as MTPredictor, we have an advantage because if I come back to this high, I right mouse click, I do decision point, we have the advantage of knowing that there's an area of potential resistance there. So what we do is we look to the next bar after the breakout. In other words, this is the breakout bar, high volume. Let's see what the market does the next bar. The next bar, it went up into our level and then reversed back down again. Now looking at this, do you really think that if a market has broken out to new highs, if it's going to carry on higher, it would actually reverse straight back down again? No, it wouldn't, because obviously there isn't, it needs, if a market to carry on going, it needs buying behind it. So what's happening here? Why on earth did it reverse back down again? Well, what's happening is the professionals are coming in and selling into this rally, the bar before. In other words, the professionals are taking the breakout to a new high to then enter new short positions to then reverse it back down again. Why do we like this? Well, we like this because this means we're now looking for a short trade. If I right mouse click, we do analysis, and this gives our potential trade setup. Remember, we're looking for position sizing, so we keep our initial risk small under control. In this case, taking 2% of a sample $20,000 account. Remember, you can have different account sizes if you wish to then take account of different risks. And we have a potential target of our opposing DP level there. But we like the VS setup because this is the professional traders looking to go short. So we have amateur traders thinking it's going to go up. We have professional traders positioning short. Obviously, we want to be on the side of the professional traders. Therefore, we're looking for a short trade to come back on the way down. If I turn trading mode off, you can see this is basically what the NQ has done at the moment. It hasn't quite reached our profit target here, but it's declining down quite nicely. So this is what the VS setup is all about. It's about catching a fake out. I mean, that's another probably word for it in traditional technical analysis. In other words, the market made a fake in one direction to then move in the opposite direction. But we have the advantage here at MTPredictor because we have our decision point level. Our decision point level is the level where professional traders will normally make the reversal if they're going to make the fake out. That's why I've called it decision point, because it's the area where a decision is made, very often by the professional traders. We also have the advantage that we can use position sizing. So if we're wrong, we can keep our losses small. We also have the advantage that we've got a potential target for this. So we're not just saying there's any old reversal, but we're saying there's reversal with a potential move to this level. So if we're right, we have a profit that's large, but not just in dollars, but in relation to our initial risk or losses when we get wrong. So I like this particular trade setup because it gets in the direction of the professional money. And normally you get quite a good move off this if it's going to go in your direction quite quickly. In other words, the professional traders tend to move it because the professional money is bigger, therefore markets tend to move with you quite nicely. So do you see what we're trying to do with this VS setup now? We're basically looking for a reversal beyond an psychologically important higher low. That's what we're looking for. Sometimes you'll see the software, there aren't probably any good examples here. I mean, this one was probably fairly good because that was quite a good low there. Sometimes the software will find a VS trade setup that's only in and around a minor level. They're not quite as good. Again, this is why we don't do black box trading, because we want you to look at it a chart by eye. We want you to look at it and say, what is this VS setup faking around? In other words, what's it failing around? Is it then failing or faking out around an important psychological high or low that the rest of the world or the amateur traders would see? The better the previous pivot is, like this one here, the better the trade setup is. So that's what we're looking for. We're looking to catch the amateur traders in the wrong directions, like the professional traders, to then move that in the opposite direction. So are there any questions on the VS setup and what's it trying to achieve at the moment? I mean, personally, my two favorite trade setups in the software are the VS1 and the W3 or Wave 3 trade setup. The Wave 3 trade setup, because it has the largest potential profit in relation to the smallest initial risk, because it's trying to catch a Wave 3. So you've got a potential large profit in relation to a small initial risk. The other one is the VS setup, because it gets you in the direction of the professional money. Now, obviously, both these setups, they don't work 100% of the time. It would be lovely if they did, but then the world's not like that. You always will get losing trades. But it's been quite a while since I've covered the VS setup, so I just wanted to go through the detail of what it is, so you can understand what's happening when you get that label come on the chart. And obviously it's in the scanner when it comes up as well. Right, so are there any questions on the VS setup that we have already? P8 says there's a nice VS sell on the daily chart of gold. So actually, interesting enough, we ought to have a look at gold and crude oil, shouldn't we? Because that's fairly topical with what's been going on in the Middle East. Here's a chart of crude oil. Crude oil on its way up. This is a daily chart. That's our higher time frame resistance. Our weekly resistance hasn't quite got there. Here's a daily chart of gold. That's the one PH was talking about. Obviously, as this attack or assassination or whatever you want to call it happened, gold rallied up, but look where it stopped. It found resistance at the higher time frame level. So it'll be very interesting to see whether this does provide to be a high and gold does start to come back down again, or whether tensions carry on and it goes back through again. So a good one to watch there on gold to see what actually happens at that particular level. Remember, nothing that we do is 100%. This is, I think, a big mistake that people make, is that they put analysis on the chart and then they think that whatever they do is 100% correct. It's not. Okay, guys, that's not what trading is about. Trading is about, when you're wrong, keeping your loss small, and you will be wrong. Everybody has losing trades. It's about keeping those losses small. But when you're right, having trades that the profits are larger than the losses. So it's not about saying that, oh, here's a high, therefore the market will go down. It's about looking at this and saying, if this is a valid VS setup, which it is, if the market gets down to this level, the profit will be 4.4 times the initial risk. If it doesn't and stops you out, it will be a 1 hour loss. That's what trading is about, is keeping the losses small and profits large. It's not being arrogant enough to assume that the market will actually go where you project it to go. No one here can move the market. And I think that's a big sort of a reality check that you learn as you become more experienced, is that it does not matter what you place on your chart, on your analysis. There are millions of traders worldwide who have different opinions to you, and as well as the big boys, the professionals. And sometimes it will go the opposite direction. So when you're wrong, the losses are kept small. When you're right, the profits are large. Yeah, Sylvie made a very good comment. He says, a good trade is not a good trade that makes money. It's a trade that follows your rules. Sylvie, and that's very wise, actually. It's nice. I've got quite a few people in the with MTPredictor who are very good traders who've been with us for a very long time. So it's nice that you guys are in the webinars as well. So that's the best thing to do, have a set of rules that you use to follow. And then if you get stopped out for a loss, as long as that loss is kept small at -1R, then that's a good trade. If you then held it all the way down to your target, and that target is a good profit, a good R profit, not necessarily dollars or whatever currency you're trading in, then that is following your rules as well. And we've talked about psychology a lot in the past, whereas the first hardest thing to do is to keep your losses small. The second hardest thing to do, and this is probably harder than the first one, is to let your profits run. I mean, here's a great example of this particular market open at the moment. You know, it's very tempting to think, oh, well, I'm on about 2.8R. Do I want to take a profit? Or do I want to wait until you get down to 4? It's very difficult to hold trades and give them time to reach their targets. It's so easy to look to cut your profits short. And then you'll only have small profits and large losses, and you're back to what amateur traders do and doing the wrong thing. So psychology is a really difficult thing that you have to master. And the only thing that helps with that is time and experience. I think this is why probably 97% of amateur traders, they say, the statistics, it's quite horrific, isn't it? That 97% of amateur traders never make it. Because first and foremost, they've got no trading discipline. First and foremost, they want to trade too much. They've got no plan. They let their losses, they don't cut their losses short. They let the losses go. And more importantly, they never let their profits run and never get to their targets. I mean, if this doesn't get there and then stops you out, well, that's just, again, the price you pay for allowing the other ones to get to your targets. Trading is not easy, is it, guys? Trading is not easy at all. Not necessarily about fundamentals we do here, but the psychological games that go on in your head. That's sometimes the hardest things. Right. Any questions on what I've talked about before? Because I want to do another quick tip on opening NinjaTrader 8 at the beginning of each day. This is another one that one of our customers, Rick, has shared, because I sent out an email yesterday doing some tips about using different workspaces with NinjaTrader 8. But what he's also said is if you go to, before you open NinjaTrader 8, just to clear the data, he says this actually works well as well, and I've seen this on forums as well, is that if you go to the NinjaTrader 8 folder on your PC, this is using Windows Explorer, then go into the DB or database folder. These folders here basically keep all the sort of the previous day's data in there. So sometimes NinjaTrader 8 can get a bit stuck when it's trying to load in historical data, then connect that up with real-time data. Sometimes it can be a bit difficult. That's the NinjaTrader database. So that should be around about 7.5 kilobytes. If it's significantly bigger than that, then you probably want to delete that and let that be recreated as well. But normally leave that. So what it suggested doing is basically deleting these folders. So just the folders, the cache, the daily message. So all the folders, not this one, leave that one, not that one, in this database folder. So if you delete all those, then it just leaves you with the NinjaTrader database in that folder. Then when you come to open NinjaTrader 8, what it's doing is basically opening with no data in the background. It just means it just doesn't get in a bit of a mess. So do you remember my video that I shared with you? What basically I do, and again, I've seen this on lots of other forums, is to allow NinjaTrader 8 to open with no workspaces open. In other words, you close the workspace the previous day. So just as this opens, it opens with no other workspaces. What we also want to do is have the patience to wait until our MTPredictor tools are registered. You see here, when I've clicked on tool, MTPredictor is not in that list yet, because in the background, it's actually doing our licensing checks. So just click on a few tabs, just wait for a couple of minutes, well, not a couple of minutes, but wait for about 30, 40 seconds. Because now if I go to tools, you can see that the MTPredictor tab has now appeared there, or the menu items appeared. So now that means our licensing has been done. It's been done without having to do any of the other loading as well. So what we're trying to get NinjaTrader to do is do one thing at once. So now it's opened. It's now licensed MTPredictor. We can now go to workspace. Do you see there's no workspaces open here at all? Nothing at all. My untitled one here is just basically empty. So now I go to workspaces. I now click on my workspace with all my charts and market analyzers in. It will now load this up. But the thing different compared to the video I did is now it will load it up with no data. So each single chart will come up blank. Do you see that? It's now finished the loading, but every chart's blank. It's blank because there's no data. That's good because it doesn't mean to say it's getting confused with previous data. So what that means is now when you go to connect, you do your data feed connection. By the way, please do not get NinjaTrader to automatically connect on open. That is the single worst thing you can do because it just means that NinjaTrader 8 is doing so much, it just gets in a mess and falls over. You have to treat it a bit carefully. You have to just do one thing at a time. So now that workspaces are open, and you can see they're empty because there's no data in because we've deleted all the historical data. Now if you go to your data feed and connect that, what it'll do now, it will then load the charts in, but because it's only loading the data that you're needing, it will load it so much quicker and easier. You see it just came in there straight away. And there it is, it's done the calculation, everything's come in, and the charts have loaded perfectly and quickly. Just means that things is a lot smarter and a lot better. Also, a couple of tips is if you right mouse click on a chart, do data series, when you set these up, these charts up, only load 1,000 bars. Do not load more than that. If you load more than that, it will just get things bogged down. So you only want to have 800 to 1,000 bars. You can see here, this one here is bars 1,000. Just makes it a lot quicker and easier to do. So as you can see here, it's just opened up. There's the market analyzer come in there, very nice as well. Again, if we go to the columns, on the columns, you can see if I come down, it has bars, in this case 800. So do not have any more than that. If you do, it'll just take a lot to load in and just get in a bit of a mess. So that's a bit more of a tip for one of our guys, one of our traders, our MTPredictor users. So thanks very much, Rick, to that as well. So that might help you guys make NinjaTrader 8 just open a little bit more reliably each day. Right, so here the market's open. Not much change from yesterday. So we'll see whether these decision point levels hold and see whether we get a decline today. I'd be very interested to see that. Right, so that's all I really wanted to talk about today. So are there any questions on what I've spoken about so far, or indeed any questions on anything else in the last couple of minutes on of the webinar? So remember, the webinar's for you guys. The only people who are in the webinar are MTPredictor users. There's nobody else. So you all got the software, so feel free to ask any questions. No one else can see your questions, so I can only see them here. So do feel free and ask any questions you wish. Because this is what these webinars are here for. They're here to make sure that you can use MTPredictor to the highest levels. They're here to make sure that you understand how we approach the markets, how to get the best out of it, because I want every single one of you guys doing the best you can with the software. So that's why I do these for free for you guys, to make sure that you're getting the best of the software. So, you know, any questions, please do ask. That's what we're here for. Azir said, on the Forex markets, do you suggest timeframes less than 60 minutes? Yes, you can do. I mean, if on this Euro US dollar, if we go down to the 15-minute chart, there you go. There's that same TS3 W3 trade setup. There's your entry. It's a slightly better entry. And in this case, the trade would have actually completed, because there's the typical wave 3 WPT. So it's just reached that. So that would be a 4-hour profit. If you wanted to, you could go down to the higher time frame support in this case. So on this 15-minute chart, the higher time frame would be the 60-minute, which is the DP we've got there. So you could do that to get a slightly higher risk reward. But yeah, there's a 15-minute. There's that same setup on the 15-minute, which is a slightly shorter time frame. So yes, by all means, you can do that on Forex. But I wouldn't suggest going down to things like 3-minute charts for Forex, because if you do, you know, the spread is just, you know, it can chop you to pieces. So it's just a lot harder to trade on very short time frames on Forex. So just have slightly longer time frames. Yeah, I know it's quite confusing when I look at the USE minis, and I tend to look at the 3 and 15 minute, because you guys who trade Forex then try to follow that. But in reality, Forex, you need slightly longer time frames. So anyway, this is a nice trade setup that's unfolding on the 15-minute euro. It looks like we're almost getting there. Anyway. Right, so any more last questions? So I think we've covered lots of things today. We've covered the broad idea of how best to use MTPredictor, and that is the time frame you're trading on, to then go to the higher time frame chart, to then place your DPs on the higher time frame chart. That then sets your stall out, and effectively you're waiting or seeing if the market does what you anticipate. In other words, is the picture becoming clear? If it does what you anticipate, the picture is becoming clear, you can then look for trade setups that are in the direction of that new large degree trend. We also understand that within that, sometimes you will get days like yesterday on the E-minis, where you can set your stall out. You can have your 15 minutes or your higher time frame DPs that nail the high and low of the day absolutely perfectly. But within that, you can get no trades. That is really frustrating when that happens. And we also then understand that even within that, you will then get trades that can also be losing trades as well. But the trick is keeping those losses small. But I think one of the hardest things is waiting until the picture becomes clear. I think this is one thing that quite a few of you guys have told me as well. I know I found in my early days is when you're waiting, it's so easy to see something that's not there, and then to place trades that look back and, well, that was a silly or stupid trade, and then that loses money unnecessarily. Trading is a very hard game psychologically, and I think there's not enough said about that with the training that goes on with lots of people. So hopefully I'll keep reminding you about that in these webinars as they go along as well. Right, but I think all the questions have basically run out now. So I'd like to say thank you very much to everybody for coming in. TJ said, what time frames would you use for day trading the indices? Well, TJ, you've been with this for a very long time, so you'll know that basically I like to look at the 3-minute with 15 minutes for trend. This is what we look at virtually every webinar, and we have done for the last however many years. So, you know, that's what we tend to look at for the USE minis. Right, okay, thank you very much, guys. So I hope you've all enjoyed this. I'll try and get the recording up onto the recording page a bit later today. But otherwise, welcome to 2020. Hopefully you all had a very good time off at Christmas with friends and family. I hope you had a very good happy new year, and let's try and make this one of the best trading years for you all. So happy new year, welcome back to the trading, and yeah, any other questions I miss, or you think of any other ones, drop me an email, steve@mtpredictor.com, and we'll cover them in next week's webinar. So have a good trading week, and see you all next week.